Hello everybody, welcome to another update on the stock screener. Today we're going to talk about Birchcliff Energy, which is a new candy for the candy store. The reason why I bought this is because I needed to diversify because I had too much Verde. So it's not like I don't like Verde, it's just I need to diversify. So I bought this company. I always wanted to have a US natural gas play. And this one is, I think, the best, one of the best out there. So I want you to take a look at this chart. So this is the European natural gas. It's at an all-time high. And this is the US natural gas. This gap is getting larger and larger. Okay. I don't think this is going to close lower. So I guess US natural gas has a long way to go up from 10 maybe to 20. And if we look at the European forecasts, they say that next year we will be at 140 and in 2024, 90. Okay, so where is that? That's here and here. So you can see that it might come down, but it will stay elevated on this trend line. And this trend line is going higher. So this is not going to go back to the 2021 levels, 2020 levels. It will remain very elevated at this trend line. So when we go back to this chart, it will go on this trend line around 35, 40, right? So that means that US natural gas needs to go up to close the gap. Okay. They will build LNG plants, LNG tankers in the coming years, so this keeps on rising. That is our premise for buying US natural gas companies. Okay, now over to Birchcliff Energy. This is a US natural gas producer. Basically, all of it is natural gas. So natural gas liquids, 9%, 83%. So that's just 90%, okay? And there's a little bit of oil in it. So this is a pure Natty play. Market cap is at 3 billion CAD. That's this blue dot here. There is quite a bit of liabilities. Price to book is 1.5. That's okay. PE ratio of 3, so it's very cheap. Can easily go up another 50% from here if we look at the peers. Not a lot of cash. That's equity. Earnings about 1 billion. EBITDA 1.6, so 2 times EBITDA and 3 times earnings. They will pay a dividend around 6%, so they have earnings. Now, the production is at 80,000 barrels of oil equivalent. You can see that here per day. And it is going to rise to 90,000. So not a lot of growth, only about 10% in a few years here. But okay, you are playing the natural gas price with this. You're not playing the growth. But at least it's going up. So that's good. They have about 1 billion in reserves, as you can see here. 1 billion in 2P reserves. So that's about 30-year mine life, 20 to 30. If you do the calculation. So good mine life. And they are able to increase production. You can also see that they still find more gas. So it is still rising. The costs are about 18 CAD, and that is per barrel of oil equivalent. So the natural gas is converted into oil equivalent, so with a 6.8 conversion rate. This 58.7 comes from here, 58.7. That's the realized sales price, which was at a natural gas price of 8.61 Canadian, so around 6.5. Currently, we are at almost $10 US. So that's about 30% higher. So I added 1.3 here, 1.3 to the 58.7. So that's the price right now of natural gas. And this is the cost, 58.7 minus 4. You can find that here, 58.7 minus 40 with the operating netback, and then you have the costs. So when we do the calculation of the valuation, we just take the production times price minus costs times 5 multiple, and we get this number here. So this is an easy double. Can probably go to 6 billion. And then with the production in 2025, we will get to this gray dot here. Not a lot of upsides on production growth, but valuation-wise, there is upside. Financials. So this is the equity. These are the revenues, and these are the net earnings. So there's a healthy net margin, 40 to 50% net margin, very good. So it's a safe play on the natural gas. And let's do some sensitivity analysis. So let's say that US natural gas keeps on rising, which is very likely in the coming years. Let's say it goes to 15. So that's a 50% rise. So I'm going to add here 50% times 1.5. So that would give us a valuation of 5-fold from 3 to 15. That's very good. If it goes even higher, let's say $20, which is possible because this is the trend line, still below the trend line. So that's a double in natural gas. And then we times 2. And then we get to 20 billion. So that is 6-7-fold. So this is highly leveraged to the US natural gas price. Perfect natural gas play if you want to play this gap here. And this gap will close somehow. We just need time. The Flex LNG plant will come online, and then this will skyrocket to new all-time highs. Okay, that's what I bought. I also bought Trillion Energy. It was at the forward PE of below 1. So next year it's below 1. I think it's also a good play on natural gas, but in Turkey. You can do the calculations yourself on that one. But yep, that's what I did. And I'll see you in the next video. Bye.